Welcome, everybody. Thank you for joining the webinar today. This webinar's topic is Beyond the Basics, Understanding Payroll and Its Importance. We are your webinar hosts. My name is William Bunkley. I'm a product quality representative, and I'm joined with...
My name is Andrea Ghent, and I'm the Client Success Manager.
Today, we're going to explore a few different topics related to payroll, just kind of like a general overview of what it is, how it works, understanding some important topics with payroll, kind of like the importance of it, how it helps with your filings, just general information, and then how TaxBandits can help you with that.
So with payroll, we'll talk about calculating your gross pay, subtracting taxes and deductions, different ways of issuing the net pay to your employees, and also contractor pay. The responsible party for payroll are employers and payers.
So who gets paid? This would be employees and contractors. With employees, their work is kind of controlled. They are earning wages, and usually with that, there are deductions that are associated with that, and they will get a W-2 at the end of the year. This can be hourly or salary pay. While contractors, they're a little more, you typically like freelance. This would be considered non-wage income usually. That's a pretty important term. And companies don't typically withhold payroll taxes from them. There might be some situations where that can happen, but typically this will be like a 1099 recipient.
So with payroll, the first thing you need to determine is how often you're going to pay your employees. And the most common pay frequencies or payroll cycles are weekly, biweekly, semi-monthly, or monthly.
With that, this can impact certain things like pay dates, tax deposits, reporting, wage information, and there's specific laws that are in place depending on the state that you're in that can affect which pay schedule you should be operating under. And a lot of times, depending on the pay dates, that'll determine some tax liability as well. So that way, you know what you need to file, what kind of deposits you should be making, making sure that you get all the information that you need, like anything that's been withheld from employees, organized and together.
So when you're bringing employees on board, you want to make sure that you're collecting all of the applicable tax forms. Um, you'll normally get a federal tax form, which is your W-4, and then if your state has its own separate tax form, you'll have the employee fill out one of those as well. If you're going to pay your employee through direct deposit, you want to make sure that you have a direct deposit form with their account number and routing number and a copy of a voided check. If you offer benefits, you're going to have the employee enroll in benefits or opt out, but that's normally indicated on paper that they've chosen not to take advantage of the benefits. And then you need to determine the employee's classification, their pay rate, and pay schedule.
And then it's important to record a lot, record like the hours worked and overtime and bonuses, because a lot of this pay that is being done through payroll is important to report, because not every pay type is going to be taxed the same way, and you need to make sure that you understand like what might be considered a credit or what might be not really taxed at all, or what type of tax it is. For example, like we talked about 941 a lot, but there's also federal unemployment, which is typically reported on a 940. So knowing the kind of payments and the taxes associated with those, so you can make sure that you are compliant and not going to have as many issues with the IRS. So knowing the types of pay, how many hours were worked, overtime, bonuses, commissions, anything like that. It's important to know that when you're reporting this information correctly, and you know what needs to be put in which form. That way you can stay compliant.
So the first thing you want to do is calculate your gross pay. So once you have determined the employee hourly rate, you're going to hourly rate, number of hours the employee. Um, Example here, Lisa makes $20 an hour. She works 40 hours a week. Her gross pay is $800. Salaried employees, they're normally a set amount. You're not calculating hours or tracking hours unless you have agreed to pay your salaried employee overtime.
You go to the taxes and deductions. These are where the forms that Andrea was talking about earlier kind of come into play. Um, with withholding, like she said, we do W-4s for any employment um, that will be occurring, and you can put specific deductions. Employees will typically fill out like anything that needs to be filled out associated with their withholding. So any elections, dependent things like that, that can affect their federal and state pay, and then the withholdings on their pays when payroll is run. And any benefits, retirement plans, garnishments, a lot of that will come into play as well with if, for example, like a contractor, if there's any backup withholding that you might need to take into account, that would be another example where you might need to check and see like what you need to file and how you need to handle that, especially when paying the contractor.
So how do you calculate your net pay? You're going to take your gross pay, you're going to subtract your taxes and deductions, and that's going to equal your net pay. Keep in mind, taxes are required. They're going to be deducted based on how the employee fills out their withholding form. Deductions are normally not mandatory. That is something the employee is going to choose if they want to have deducted or not.
And then issuing payments through direct deposit. If you're going to do like a check, pay card, another approved method, um, there's various ways that you can run payroll and pay your employees. Some places are still doing just physical checks. A lot you'll hear about you'll see direct deposit, where you need the direct deposit slip and the voided check. Pay cards are becoming a popular thing as well. Either using it like a specific app or uh, just even third-party providers like Venmo. And yeah.
So payroll tax the to file payroll tax returns and make payroll tax deposits, you are going to be responsible for submitting payments for the federal taxes withheld, state taxes that would be withholding and unemployment. And if your state or city has a local tax, you would be responsible for withholding and making the payment for the local taxes as well.
And with all those payments and all the deductions and such, you're gonna enter this information on 1099s and W-2s. So if you're withholding any like Social Security, Medicare, the FICA taxes, any unemployment, state, local taxes, a lot of those will be reported on the W-2. With the 1099s, typically just state information. There may be holding, there may not, depending on the situation and how a contractor might have filled out their W-9. But a lot of it just fits in with what you're paying throughout the year. You need to make sure you have a good record of it, everything that you're taking care of, withholding, not withholding. Um, you want to make sure that you've got good records of that so you can report that accurately and give your employees and contractors the right information so you don't have to do corrections.
So understanding your deductions, again, gross pay is the amount the employee earns before deductions. Deductions are what is taken away from the gross pay. And again, taxes are required and voluntary deductions are elective.
And with that, there are different types of deductions. For example, pre-tax voluntary deductions. This can be certain things like medical, dental, vision plan premiums, health savings accounts, flexible spending accounts, independent care flexible spending accounts, retirement contributions. If you've got like a Roth or traditional IRA for a, depending on how you set that, it can be pre-tax or post-tax. Then, for example, Lisa's voluntary deductions, she's got an FSA contributing $20 and medical premium contributing $10.
So again, your mandatory deductions are the federal tax, state tax, Social Security, and Medicare. Um, these are calculated based on, well, your federal withholding and your state withholding are calculated based on how you fill out your withholding forms. Social Security and Medicare are same rate until you reach your FICA limit.
And the W-4, Andrea touched on this earlier, it is filled out by the employees and provided to the employer. So anytime somebody's hired at a business, they're given a bunch of paperwork to fill out, use typically everything all at once. Um, New hires, unemployment information, W-4, direct deposit, all that typically will come in this giant package that you have to fill out. And with the W-4, this kind of helps the employer know what deductions need to be taken out, how you are reporting your personal taxes, and they'll know what they need to take out to make sure that they're either like contributing to the deposit that they're making, or like what just how to tax you properly. And it just helps avoid larger bills and too much tax withholding, especially if you're going for like a specific amount or if you've got dependents, any specific situations. It's important for your employer to know that so they know the right amounts when giving running payroll.
So other post-tax deductions, certain health plan contributions are post-tax instead of pre-tax. It kind of depends on the size of the company and the type of insurance they're offering. Roth retirement plans are post-tax. And then other examples are life insurance, of course, gym memberships, loan repayments. Those are going to be post-tax. Garnishments are normally post-tax as well, and they do vary per state.
And with running payroll, there are federal and state obligations. So as you're running payroll, you're making these payments to your employees. Um, you're going to have to file specific forms federally and on a state level as well, usually. For the federal, there's the 94X series. You hear about 941, 940, 943, and we'll go a little more in depth with those. But those are all typically like federal, for the most part annual, except for the 941, that is a quarterly form. And then for state, that's going to depend on what state you're in. Some states will have monthly forms, some states will have quarterly, annual. Um, it just kind of depends on the state and the frequencies, what they're looking for. And the states will most of the time require withholding and unemployment reports.
So with the 941, this is going to report the wages that you've paid your employees. and the amount of tax that was withheld from the employee's gross pay. Um, it also covers the Social Security wages, Social Security tips, taxable Medicare wages and tips, and then employment tax liability is made up of both the employer and the employee portions of the Social Security and Medicare tax. And you're gonna do this every quarter. It's just letting the IRS know that yes, I did withhold this tax from my employees, but I also paid it to you. So this is what I withheld, and this is what I paid.
And there's some other forms, like I said, with 940, the 94X series, there's the 941, 940 for more of the federal obligations, the 944. That's typically if you have a lower liability, and the IRS typically determines that depending on where you are with your business. Um, they'll let you know if you're required to file a 941 or 944, and sometimes that can change as well. The 943 is typically the same information being filed, the FICA, withholdings, wages, but 943 is specific to agricultural employers. So farms, any place that's harvesting, planting crops, things like that. The 945 is specific to non-payroll withholding. So this is a little different in that it's not necessarily wages, whereas 941, 943, 944, those are all coming from payroll taxes and payroll that's been run and paid out to employees. 945 is typically for non-payroll withholding, so non-wage payments. If you from a contract, if you had to uh, withhold backup, um, back back pay. Um, Typically, you'll see this with other places that might withhold things like casinos as well. Um, casinos would have to file like a 945 for any taxes withheld for gambling winnings, and then the CT1 for railroad employers.
So deadlines for the 941 are April 30th, July 31st, October 31st, and January 31st. The 943, 944, 945, and CT1 are filed once a year. Their deadline is January 31st.
And then with those, it's important to know what type of depositor you are. This is determined by the federal amount of employment taxes and a look back period. So if you reported less than 50,000, you would be considered a monthly, and anything more than 50,000 would be a semi-weekly depositor. This is important because some of the forms will have extra schedules to fill out depending on what you are reporting. And that's just to kind of check the liability, see when anything was due. And
So your look back period for the 941 is the 4-quarter period ending on June 30th of the prior year. An example of this is July 1st, 2024 through June 30th, 2025 determines the depositor status for 2026. And with a 944, it's the second preceding calendar year.
And with that, the requirements will vary by states. Some states do not withhold income. We've got the abbreviations listed below. And then state unemployment, though, is required in all 50 states.
So new hire reporting, this is going to report newly hired or rehired employees to the state. And it's used to assist with child support enforcement. It's going to help prevent unemployment fraud, and it verifies eligibility for certain government programs. The deadline to file the form is going to vary per state. But normally this is something that you would have the employee fill out when they're hired or rehired.
And with the record keeping requirements, you're making payments with these forms that you have to file, obviously with the IRS and at a state level. They're checking to make sure that everything that you're reporting is accurate, if anything is lined up when you're making your deposits, if that matches with what's been reported on the forms that you're filing. And so it's important to make sure that you're keeping records of everything related to wages paid, any taxes withheld, payroll tax returns, and keep them at least for 4 years.
So the Fair Labor Standard Acts, or FLSA, um, they have their own set of record keeping requirements. It's a little different than the IRS. The IRS is focusing more on wages and the taxes, whereas the FLSA is focusing on wages, hours, and the compliance of this. Um, Most reports are going to cover all of the information needed for both agencies, but the FLSA is going to focus on the hours worked, the wages earned. Overtime is huge. You want to make sure the overtime is calculated correctly, and your employee classifications. If these records are required to be kept for 3 years, supporting documents like time cards, you sign in and out sheets, we're gonna keep those for 2 years. Um, the Fair Labor Standard Act is a federal, act, but each state has their own, uh, variation of this and their own requirements.
So it's best to make sure that you've got all of the employee information, all of your employee information, timekeeping records, everything is secure in a safe location, um, and that you're able to access it whenever needed. Payroll registers, tax forms, and filings, you keep record of those. Deposits, confirmations, especially, because sometimes the IRS likes to send out letters, even if you have paid or filed, saying you haven't paid or you haven't filed. So it's extremely important to keep a lot of records like that. EFTPS payments, bank drafts, anything like that, and wage and deduction records.
So digital record keeping is a lot easier than keeping up with a lot of paper. It lets you organize and keep everything in a central location. The retrieval is more simplified. It reduces the risk of lost or damaged records. Like if you had paper copies, you've got to worry about if there was a fire or water damage, whereas a digital, they should be safe. Um, and it supports retention periods, normally for a longer period of time. If you just don't go in and delete information every 3 to 4 years, you've got ample storage to keep that.
It's just easier to store
Yeah.
years and years of information on the
Yes.
computer rather than buying multiple cabinets and folders and what else. With that, there's also improved accuracy. Manual errors are reduced, payroll taxes, deductions, a lot of digital systems are calculating the taxes for you. And based on whatever information you've entered for the employee, that would also kind of go into the auto calculations. There's a trail and you're able to maintain the consistency needed. Typically, you'll be able to pull records and kind of see all the information to make sure everything adds up rather than having to go through paper after paper after paper and hoping that you have everything. There's also faster access to information. So, again, not having to go through all the cabinets, folders. You can just go in, go to reports, find it, or um, history, activity log.
So also with your digital record keeping, the security is stronger. You're going to have password protection. Um, user access controls. As an employer, you've got the ability to only have certain people have access to that information. Data encryption, automatic backups, and disaster recovery. It does reduce storage cost, and also it supports remote and hybrid work.
And then some common mistakes that can happen with payroll, misclassifying workers, having an employee versus a contractor. Again, employee is typically somebody who's going to be wage earning. You're going to be running payroll for them. They're working for the company versus a contractor who might do a job here and there for the company. They are paid, but typically don't have FICA taxes withheld, any federal taxes withheld unless they have back pay, and any potential consequences with this. So, like back taxes, interest and penalties, liability. On top of that, you might have to do correction forms. So, if anything has been reported correctly, you don't really want to go through all that. You prefer to just do everything one and done. But with these, W-2 for the employees and 1099 NECs for contractors.
And then a huge mistake for is if you misclassify a worker if they're exempt or non-exempt, and this is related to overtime. An exempt employee is not eligible for overtime, whereas a non-exempt employee would get their base salary plus overtime if it was worked.
And then errors occur when any employee W-4s are entered incorrectly. So if somebody has filled out their W-4 and elected deductions that maybe they shouldn't be taking, or filling out their information, any dependents, anything incorrectly, that can affect with any tax rates being outdated, state withholding requirements being overlooked. Late filing can result in corrections, penalties, and audits, and nobody likes having the IRS look into them.
Errors often stem from missed time punches, incorrect hours, failure to track overtime, incorrect overtime calculations, or data entry errors.
And then failure to report new hires. Again, this is something that's required by many states, and consequences can include penalties and issues just more at a state level.
So the incorrect handling of employee deductions, uh, health insurance premiums, make sure you are fully aware whether your deduction is pre or post tax, because that's going to be a huge issue if you're not withholding it at the correct place. Retirement contributions, the same thing. Is it a traditional 401k or a Roth? Wage garnishments. Read and reread those garnishment orders. They do vary from state to state, and they can be very specific. Where you can withhold this percentage from an employee's pay, but their net pay, it still has to be a certain amount. So pay close attention to those orders when you receive them. And then, like I said, the pre-tax and post-tax deductions. You always want to make sure that if it's pre-tax, you want to make sure you're withholding it before the taxes are calculated, and that you've got documentation that supports the fact that it's pre-tax.
And always, mistakes can result in financial penalties or interest, employee dissatisfaction, compliance violations, audit risk, and legal liability. So it's extremely important to make sure that when employees and contractors give you their information, that everything is correct by what they've entered. B, you're making sure that you're entering it into your payroll system properly, and that as you're making these payments, any updates that change, anything can happen, whether somebody's um, getting married, even something as small as like a name change can cause issues with filings. Um, and again, just you don't want to do corrections. You just want to make sure you get everything as done and smoothly taken care of as possible.
Okay, so preventing mistakes. You want to make sure that your records are accurate. This includes payroll time punches or however you keep up with your employees' hours. You want to make sure your workers are properly classified. Um, your timekeeping system is reliable. Verify your payroll before processing. I know with TaxBandit system, there's like probably 3 different screens that you go through before you actually transmit the payroll. All 3 screens have the same information. It's just making you check, double check, and triple check that the information that you've entered is correct.
Mhm.
You do want to stay updated on tax laws and regulations, and you want to make sure you're aware of any deadline that's going to affect your company for tax filing.
Mhm. And so with Tax Bandits, we offer a payroll solution. A lot of what we've discussed is kind of built into the payroll solution. So employee onboarding, you putting in the information of the W-4. Um, the employees are able to you can either fill it out or you can send it to them and have them fill it out for you. Um, they'll be added into the address book, so that way when it comes time to uh, file forms, 1099s, W-2s, uh, they're already in the address book, so you don't have to enter their information all over again. And with the information entered on W-4s, there's the automated calculations and payment scheduling. So you can choose your schedules, your pay period, and it'll calculate the taxes and everything for you based on the information that's been entered.
So TaxBandits does offer step-by-step payroll processing guidance. You've got the option to process your regular payroll based on your pay schedule, bonus payrolls. Um, we also offer off-cycle payrolls if you uh, have someone that you are parting ways with and you want to just go ahead and get them paid and out of your mind, then you can run a um, off-cycle payroll to do that without messing up your regular pay schedule. Um, you've got the opportunity to select specific employees to pay. Um, and then after that, you're just entering the earnings, the deductions, and then, like I said, you've got several screens where you're going to review the summary of that payroll before you transmit it. We also offer a knowledge base on our website and within the application. And so if you have a payroll question, you can ask it. We offer live demos if you request a demo. And then we have live email, phone, and chat support as well.
And very generally, we support around 30 states. With these states listed here, this is just going to be the base payroll. You're able to run payroll. And we've got a few states where it's more service, where you can have tax mandates make the tax deposits and file the forms for you based on the payrolls that have been run. And at this time, we'll move into our Q&A portion. You can go ahead and type your questions in the chat. We've had a few that have been submitted based from registrants who have been who've already signed up, and so we'll go ahead and go through some of those. But any questions that you have, just type them in the box, and we will get to them. If anything comes up after, reach out to our support, and we'll be more than happy to help you. All right. So one question, when do I select the under 2,500 tax liability option and when do I need to make monthly payments? So the under 25,000 tax liability
2,500.
option, or sorry, 2,500 tax liability option, typically on the 941, um, there's a section that'll say like what type of depositor are you, monthly, semi-weekly, and this is a third option. And so with that one, um, typically if you're once you filled out page one of the 941 and you've found that you see on line 12 with the liability, um, what that is, if it is under 2,500, that is when you can select it. Typically with the deposit schedules, that's when you should be, what is owed and when you should be making the payments. But if you are under 2,500, um, then you can select that option. That just kind of allows you to, like, if you owe anything at that time, you'd be able to just go ahead and file and then make the payment rather than um, when it might have been owed if you were like a monthly or semi-weekly scheduled depositor. And with the monthly payments, I believe that's typically the 15th of the following month, right? Where
Yeah.
if you're like a monthly scheduled depositor, um, once you've run the payroll for 1 month, then the following month you have to make a payments towards the liability for that month in the next one. So January going into February, that would be February 15th. How do I manage payroll through TaxBandits without using TaxBandits for the deposits needed? So, do you want to take?
So TaxBandits will calculate the deposit, and then if you want to make that deposit yourself, you can. We only do tax deposits for the 3 states, Texas, Florida, and Tennessee.
Mhm.
So if you're in one of those states, when you create your account, you have the option to select tax payments through TaxBandits, or I'll handle the tax payments myself.
Mhm.
If you're in another state, then you you're not even given the option. You'll just be responsible for making those payments on your own.
And so I understand clearly exactly what payroll related services. So yeah, that's the within the 3 states, Florida, Tennessee, and Texas. Again, it's more of a full service, so you have the option for TaxBandits to do the filings for you, makes the tax deposits on your behalf, run payroll. Whereas with the other states, it's just basic payroll. Everything else will have to be handled by you.
Keep in mind, though, we are offering a lot of state filings
Mhm.
now, and our goal is to support all states. But
Yes.
we're not quite there, but we're well on our way. So if you decide that you want to use TaxBandits just to calculate your withholdings, you would make those tax payments on your own, but at the end of the quarter or whenever those state forms are due, um, check our website, because or check your TaxBandits account, because there's a very good possibility that you can do that state filing within your TaxBandits account.
Also the new hire and
Yeah, new hire
mhm.
reporting as well. We're actually, you may have gotten a phone call from us. We're in the process of calling clients to let them know that we are supporting new hire reporting in their states.
And let's see, a few questions have come in. Um, Good question. Will you email a video of this after? So yes, all of our webinars are recorded. So they'll be posted on all of our social media and on our website. And if you sign up for a webinar, it will even be emailed to you. So even if you can't attend a webinar,
Yeah.
we always encourage you to sign up. So that way you'll be notified and sent the recording. But if you ever miss it or you forget to sign up and it's already passed, you can always check back on YouTube, our webinar page on our website and taxbandits.com. And you'll always be able to see the webinar. Let's see. Uh, How do I know if our health insurance payments should be taken as pre-tax or post-tax deductions?
Your insurance provider, or the person that wrote the policy, should have told you if that was a pre-tax or post-tax plan. Normally, if it's a larger company and it's a hefty amount of benefits, it is going to be pre-tax. A smaller company, that would be when you would really have to look in and make sure that you're doing those deductions correctly.
And then, what does it mean if the state does not withhold federal tax? Typically, with federal tax, such as going to be anything related to the IRS, just on a
Yeah,
government level. State is always just going to be anything made for states, city, local taxes. They're pretty separate, and it's a lot more for compliance on a state level,
yeah,
like with the Fair Labor Standards Act.
yeah. Unfortunately, it doesn't matter what state you're living in, the federal tax is gonna be withheld.
And I think that's all of our questions. If anything, if you think of anything after, or if there are any that have been unanswered, please reach out to us. Um, you can reach out to our support team. We're located in Rock Hill, South Carolina. Happy to talk to you. Um, you can reach us at 704-684-4751 or email us at support@taxbandits.com. We also have a live chat as well. So thank you for joining us today. We will have more webinars coming up in the future. So check back and go ahead and create your account. We'll even notify you about any upcoming webinars as well. Thank you for joining us.
Thank you.